The chart on the screen is the silver chart on the date of September 30th, 2011. And what we seen within this time frame was 1, 2, and, well, 3 consecutive days, or less than 3 days, where the market moved from pretty close to 40, about 39 and 3/4, down to 26.10. And again, this happened in less than 3 days, or greater than 48 hours, less than 72. Despite eyeballing this, I can see the level to be around 39.75. And the bottom was 26.10. So I'm dividing the high and the low. And I'm going to put this to the power of 61.8%, which is the Fibonacci level. Times this answer by the low. And for this selling to be a failed move, it needs to hold and stay above about 33.85, really 34, for this to be a failure. Well, since September 30th, we have seen an entire month of October, November, December, and January come into play. It's been pretty much taken at least 4 months right now to sort through this whole situation. Now, a lot of this video will be talking about the Fibonacci retracement, and this, of course, is just an intro that when things really get going, and the bankers pretty much want to do what it is that they want to do or are forced to do, then you can often see volatility reach these kinds of levels. The month of January has come to a close. The average price for the month of January, $30.86. That's the inflation adjusted chart that I like to show at the end of every month. Now within Fibonacci, this chart is from April the 14th to current of 2010. And if it's above this green line, it's at a bullish level, red line is bearish, and I got the blue set as neutrality. I'm using an automated 150 period average, and right now within the quarter day chart, this is the first time that it's been this bullish for this long since, of course, back in here. And we're going to just quickly look at this on many different time frames and go to the regular chart, daily term time frame. It was going between the level of, well, neutral to bullish to neutral to bearish to neutral, back to bearish, and we're back to neutral again. Getting above here can get this thing back and going again. Weekly chart. That's pretty much been staying bullish this entire run towards the upside. So the retracement has been a bullish correction when you look at it on this angle. And on the monthly chart, it's same thing. Ever since it broke through in the early 2000s, there was a small 2008 bottom that was neutral, but majorly bullish nonetheless. And now let's take this on, or move this onto gold in this direction on the daily term time frame. Majorly bullish to neutral, a small hit bearish to neutral to bullish to neutral to bearish to neutral to bullish, and mainly looks like maybe possibly going sideways. If it goes sideways, that's neutrality basically. And finally the gold one, last gold one like this, and we'll get back into gold later on at the end of this video. This is the monthly chart going back to starting in 1972. So a major difference within silver, which had a more harsh correction. And then finally the gold to silver ratio. This will be it for the gold to silver ratio today. This is the short term, 3 times daily. That means I get a reading at 9:30. I get a reading again at 12, and I get a reading again at 4 New York time. And well, ever since this bottom occurred with silver going to 50, or the ratio to 31, it changed directions, a little bit neutral, then bullish on the gold to silver ratio. has slowly went into both neutral and now bearish. And the final gold to silver ratio chart is more of a long-term one. This goes back to 1972. Overall, neutral. Now, I've done price memory before. This is what it looked like the last time I looked at the spreadsheet, which was on September the 9th, 2011. And basically what this does is it takes a 10% range starting with 20. So a 10% move from 20 is to 22. And so basically it's 10%, give or take, a very small percentile. So we've had a lot of price action in here, so basically let's take a look at how it's been updated. And here we have it. Not much price action from $20 an ounce, and really even $19 an ounce, all the way up to that of $26.59, because this is 20 to $21.99, 22 to $24.19, and so on and so on. But a lot of action has came within this entire band from $26.60 to pretty much $43, and it's been a long consolidation period. Does it have to be this much that we've been here? Well, obviously it is. Does it have to be? No, it doesn't. But that's the way it is right now. Okay, now let's get started within the charts. We'll start off with silver, and I want to talk a lot about the Fibonacci. And the Fibonacci that we use is the exponential version. And within this different level, what we have is a low of 1774. We have a high of 49.81, which is a decent sized gain because you had one small move up, small correction, and a move higher. That's the entire look of this chart on the weekly term time frame. And that's why we're right now in a very crucial situation, because this level was support on 2 occasions. It was not support on the third, which immediately moved to this this next major support level, which then hit the proper resistance, which again hit proper support, and again is hitting proper resistance. Now what this means is the more often that you test a level of significant support or resistance, the more likely it is to take it out. The first time you go to it, the more likely it is that you're going to bounce from it. So the first time we go to it, we're probably going to bounce. Second time, the chances are greater we take it out, but it didn't. Higher high, and then the chances are greater again that it takes it out. It did. Chances are good that it finds support here, which was the case. Chances were good it found resistance here, which was the case. Higher chances that we take this level out. It didn't. And again, the higher chances that we take this one out. Therefore, from where we stand today, if it happens to continue to be breaking out, then what you're going to want to try to see is if this level becomes that of support rather than that of resistance. Also, by the book, what you might want to see is just a regular small little pullback between really roughly $31, $32 an ounce. And then from that point on, the odds are screeching if something like this were to occur, where, say, it just bounces back with a small dip, and then it ends up taking it out. That is super duper strong. And I don't know why I said that, but I did. 3-day term time frame. And the Fibonacci from this level uses the 49.81 high and the lows of 26.10. Therefore, when it came up to this little area here, it found resistance. Like, I guess you can say it was supposed to previous level of support. Now, what you wanted to see happen was a higher low, though, which would have meant maybe stopping around here, which didn't happen. Instead, or rather, it came back down to its previous level. And when that happens, very oftentimes what you need to be concerned about is that you're not even going to get up to this point, because you're going to most likely a lot of times find a level of resistance where the key support level was. In this case, it was around 31, and that didn't happen. So instead, we come back to this level with greater chances of taking it out. Same thing as I just said, any type of pullback in here would really screech the odds or increase the odds largely that you take it out. Next significant resistance level is up to about 38.91. Let's move this on now. Let's move this on to the daily chart. And on the daily chart in here, we're using the Fibonacci from the last major high, or the last decent high on this, which is 35.67, this low of 26.14. I've talked about this 29.44 and 31.68 the last few weeks. And obviously in here, the normal consolidation pattern, but there was no resistance here like there was supposed to be. So what does that tell you? That oftentimes that you're going to go to the next key level. Well, the first key level was that 33.5 level, which is right now where it's consolidating towards. It also found support at the level instead of resistance a couple days or sessions after it originally broke above. And currently it's in this nice little sort of uptrend consolidation along the way. And the next significant key level is the previous high of about $35.67. Okay, let's move on. Let's move this on down to the quarter day chart. And this is what we got. And I've added a few extra lines in here. You can see the 32.25, 33.05, and you can even see maybe this line in here. And that's because I'm going to go to extra levels of Fibonacci, because I can tell you the two generic levels from the 26.14 low and the current high as we stand, which is 34.41, that the significant levels are 29 and 31 basically, which are right in here. But as we stand at 33.65, a move down to 31 is 2 2/3, or pretty much 6-7%. That's a pretty decent size pullback, especially when you're looking at this on a 6-hour term time frame. That maybe there's some better areas, and that's why I put in these lines here. The first one is here at this level here, then the 33.05, the 32.25 before we even get to 31.03. But not only that, if we take a look at this line in here from this point in here, which matches that 31.05, we established the support level originally, and it still has yet to break through the 33.05. We established this resistance point here at around 34, and it's quickly went above this level, but that, as of now, it's just a pierce above, and if it manages to come back down to 33, you might be stating this is a very small bull trap. Now I'm going to add a bunch of different numbers on here. A lot of them, and you don't have to memorize them because there's a lot of them, but we're going to look at the Fibonacci. Here we go. Fibonacci is 61.8033, and then a bunch of other numbers. How do I know this? Well, I've taken the 55th Fibonacci number, divided by a 54th Fibonacci number, and I subtract 1 from it, which gives me 61.8033. Why the 55th and 54th? Because that's what I choose. I could have chosen the 37th divided by the 36th, or the 81st divided by the 80th. And what is a 54th and 55th number? Well, the first number is 0, the second number is 1, and every single number from then on in is the sum of the previous two numbers. So the sum of 0 and 1 is 1, and the sum of 1 and 1 is 2, and the sum of 1 and 2 is 3, 2 and 3 is 5, 3 and 5 is 8, 8 and 5 is 13, and so on and so on. And that's where you get this Fibonacci number. Fibonacci to the power of 2, which is taking this number multiplying itself, you get 38.19%, or 38.2. If you multiply this number 3 times, you get 23.6%, which is where I get this level here. This is a 23% retracement, and then the one above that is in here, which is the 14.6. So this little line in here is the 9% retracement. We're going to go back over this very shortly again, as sometimes it's just really, really important, and long-term silver and gold right now is very important. So now let's go on to the quarter-year term time frame, which I've got a few of those numbers on the screen here, because again, I could just tell you the two significant Fibonacci levels are 18, 16, and 9 3/4. And 18, all the way down to 18, yeah, 18, because I have this low here of 355, and I have this high of 49.81. That's the numbers I get when I calculate Fibonacci. Well, that's why you need these extra levels, which is 2670, 3388, 3925, and so on and so on. Now, when you're looking at this on a quarter-year time frame, it's really, other than maybe 2670, it really doesn't help too much. But I suppose if we take a look at these numbers on a different chart, we can see how much sense we can make out of them. So let's do that now. Let's put in the quarter-day chart, the large one, which is now about a year in duration now, as it starts back in February 22nd. Now, as far as this original area in here, we'll take a look at that after we're done in here. So basically, we'll start from this point on. Now, when we first dipped below the 5.57% retracement of $42.99, it did find support in here, and then it didn't in here. Right in here, we did not find support at the 9% level at 39.25, and there was a lot of different Fibonacci's in the 38 ballpark. That, of course, did not hit. And if you go to a level where you're supposed to find support and resistance and you do not, then oftentimes you go to the next level. Then perfectly back to resistance, back to support, close enough in here, and well, the odds are getting pretty big that you take this level out, yet you didn't. And then this level in here was found as support, which then found resistance in here. So when you take a look at these levels, they have been very, very important, and they work really, really well. So until Fibonacci stops working, I'm going to really use this very aggressively, as you see in these videos. Now, this level was not support. So when that's not the case, you usually go to the next one. That's what happened. Resistance amongst this level, another support test, and we're right back again at this 14.6% retracement of 33.88. So now let's go back to the original days and see how well these numbers worked out. And what we'll do is we'll take a look back at one of my older charts from back in the day. And this is it right in here. This was one of my charts from early May of last year. It's not logarithmic, but it'll do the job. And it says, warning, many lines will appear shortly as we go back to the scene of the crime. Of course, this is the scene of the crime. This is, of course, the hourly chart. So let's stick in those levels on this chart. There we go. So now we got all of these different fib lines. We got fib to the power of 13. This line in here is to the power of 12, but 0.8% and 1.3%, that's going crazy when you're within these levels. But what we can see here is that after it made its original high of 49.81 and it retraced back lower, as we can see in here, that's where it ended up settling in for about 4 hours or so. And as it was going lower, obviously it didn't find support at either one of these two levels down in here, or did it find support at this level at the 2%? Instead, it found support at the 3% level at 45, and then found resistance here, stayed there for about a couple of days or so, and then did not find resistance here, did find a little here, and then got above it, and then it basically this little range in here, well, you can see just how well it played out. No support here, no support here, which then led to support in here. Resistance twice at these levels, and then obviously this thing is broken down, or did break down from that point. Okay, let's now move on, and we're going to switch this over to gold, and this is very important because we're going to be doing the exact same thing with gold. This is the weekly term time frame, and I've been stating, I said last week that this low, it's automated, and you know what, whether you want to choose, I don't know which ones you can choose. You either choose the 700 low from 2008 or the lows from 250 way back when, which is what we're going to have to do. But within the automated Fibonacci, at least what we can see here is that it's found support at the bullish level twice, and that as far as this the trend line is concerned, we can at least see that we've had a break above it thus far. Let's move this on now to the quarterly chart, which is a quarter-year chart. And again, I said this last week. This is the trend, and I just put a bunch of lines up there. I don't think I need to do any more, but here's the red candles in here. Boom, which is like nothing. An okay one here. Again, a nothing, a pretty much a nothing, pretty much a nothing, an okay size one here, here, and here. That's the, I'm just going to count them, 8. There's been 8 negative quarters since this bull market began. That's it. So it's pretty much been consistently going up. And we're going to use these Fibonacci levels. But again, am I just going to say to you the next major level of support is at 883? Yeah, that just doesn't work. You have to lose 50% to get there? Don't think so. So now let's do the Fibonacci. We're going to use those lows of 253, I think it is. I'll find out exactly. 250, 170. And the high of 1920.50. So this is what I figured out in my spreadsheet. This here is this number multiplied, well, to the power of 2, to the power of 3, and so on, and then minus 1. So 1 subtract whatever these numbers here happen to be, because that's what I put it to the power of. These are the key levels. So therefore, where are we now? We trace back to like around 1500. So this key level here. But look at the difference between 1913 and 1908. That's a difference of 4.5, which is like 1/4 of a percent, 1/5. That's not much. The difference, say, from here to here is that of 30. So that's about 1.7%. So the difference from here to here is about 170. So that's about like 11%. So as you go through each number in here, they get smaller and smaller. So once you get to a certain point, you just stop using them. I have to say pretty much around here, you don't need it. But let's now see how the chart looks. So this will be the final chart of the day. And this chart is the GLD shares multiplied 10.30657. Why that number? Because I took the 4 o'clock spot price of gold. I divided by the 4 o'clock GLD price. That's what the answer came into play. 4 times daily swing line chart. So I've got through the numbers, and it pretty much starts here. Therefore, if you just take a look at this, you can see again that these levels that I put in are working magnificently. This level here is a bear trap, and oftentimes from failed moves create fast moves in the opposite direction. That has already happened. But now let's take a look at this here. You didn't find resistance here where you're supposed to. And you haven't even found support yet there either. And when you don't find resistance, and you go up a decent amount, usually halfway between the lines even, then you got to expect that you're going to go to the next one, which is around 1791. Now that hasn't happened yet. But what does this look familiar to? How about right here? No resistance was found when we first got up there. It went a little bit away, then it started retracing a bit, and where does it go? It goes right below this line, but it makes a higher low from this significant point. Okay, so if we can make a higher low from really these significant points up maybe in here, do the exact same thing, then most likely what's going to happen is it's going to come right back up to this previous level that we've seen or faced at 1791-ish. Thank you for tuning in, and have yourself a magnificent day. Bye-bye.